All right, we're here with Andrew Wells today with Cardinal Financial, and we are going to chat about conventional loans
Yes.
and what's going on with them and kind of just the common standard questions we get. I am Jenn Ghigna. I am a real estate agent in Wichita Falls, Texas, and Andrew and I have been working together for a couple years now.
Yes, we have.
And we have always closed our deals. We have never been late.
Never been late, on time, smooth.
Yeah.
It's been a good partnership.
Yeah, so we make a great team. And now that we have a couple years behind us, it's nice because we've been through a lot together. We've been through a lot of transactions together, a lot of different types of lending together.
Solving problems, getting financing correct. There's a whole laundry list of good problems we've knocked out.
Yeah, I've loved it. So I'm going to let Andrew kind of cover some common misconceptions we get with conventional loans and what it's like. So as a buyer's agent, when you're working with me, or with any buyer's agent in general, you're going to go through a steps and a process for your home buying, purchase. And one of the very first steps is us connecting you with a lender, because it makes all the difference. We don't need to be looking at homes that are not either going to meet the financing terms, or you just simply don't qualify for the particular type of home that you're looking for at the time. Sometimes it's about starting small and then going big in a couple years.
To that forever home, yep. Or if you do qualify and the payments don't work for you, we don't want to put you in a home that the payments just don't make sense. So yeah, it takes a team effort to just structure out the contract and make sure your financing is dialed in, your payments are dialed in, and you know exactly what you're looking at. So we'll start with the biggest misconception of conventional loans is the down payment, right?
Yeah.
We'll see 10, 20 years ago, you couldn't purchase with a conventional loan for less than 20% down.
Yep.
That is not the case anymore. They can go as low as 3% if you're a first-time home buyer. 3% down payment for a first-time home buyer tends to be pretty enticing. I usually recommend 5% because your pricing on your rate just gets a little bit better. But regardless, you can go as low as 3%. Typically, we try to take our buyers conventional over FHA. Not that there's anything wrong with FHA financing. The biggest thing is the PMI, right? So PMI stands for private mortgage insurance. It's what you pay monthly. It insures your loan against default. It's required on all conventional loans below 20% down. What's really interesting is on conventional loans, once your loan balance gets to 80%, you can request your PMI to be canceled. And then once it gets to 78%, it will cancel automatically. So that's the big difference between conventional and FHA financing. It's a great option. We tend to, again, push our buyers towards conventional financing because it's a more attractive financing option compared to FHA, at least for building equity. It tends to happen a little bit quicker on the conventional side.
Yeah, and probably a little bit lower payment without having to pay the PMI after the
Absolutely
20%. That helps, because with FHA, it's for the term of the loan, which is lifetime,
unless you refinance. But if you can avoid having to do that, we're gonna try to push you to avoid having to do that.
Yeah. So besides the most misconception of needing 20%, because I know even as a real estate agent, I get that question all the time. Well, I don't have 20%.
Yes.
Well, shocker. Most of America doesn't have 20%. Unless they're getting gifted funds, they've sold another piece of property to have that 20%. It just doesn't, it's not common.
Yep, especially for first-time home buyers. You don't see it a lot. So there are options out there that can help you get in for a lower down payment. Another misconception is you can't roll in or finance repairs or upgrades into a conventional loan. You can, and we actually rolled out a program last month. We're really excited about. If your repairs are lower than $35,000, $35,000, you can just work with Home Depot, Lowe's, or a big box store and have those upgrades rolled into your loan amount. So you have to qualify with the amount of repairs you're going to do. But if you're looking for a fixer-upper, or you fell in love with a home that just needs a new kitchen, please do not hesitate and think you have to go after closing and put it all on a credit card, or you have to go call a contractor to get it done. There's some options for you, and we recommend speaking with the lender as quickly as possible so they can lay out what that's going to look like for your financing.
And that's so nice, because now you don't have an even higher additional monthly payment coming out of you.
Yes.
Because 35 grand on a large loan really doesn't add that much to your monthly payment, versus if you were to do a $35,000 credit card loan, it's going to be very high.
Much more interest and a much more larger payment as well. So just having that option in your back pocket and knowing as a buyer, hey, we don't have to find the perfect home, especially if you're a first-time home buyer. We have some options where we can maybe add some new floors or add a new kitchen in if we need to.
Yeah, perfect. What are the steps and processes? I know that when you come and you meet with me, and like when clients come, home buyers are meeting with me, and we are going through my buyer's presentation, I am already saying, hey, I'm going to be introducing you to a lender. So just know that it's just because there's a step and a process to the whole system. And once you meet with Andrew, one of the most common things he's going to ask for, and I have this in my presentation too, is we're going to do pay stubs. We're going to do W-2s, those kind of things like that.
Yeah.
So you could go into, better detail on that than
Yeah,
I could.
definitely. Before we ever take you through the pre-approval process, we start with a conversation. We want to find out where you are, what timeline you're looking into, what are your questions, what are your concerns before we start delving into the actual numbers of your financing. Once that's complete, then we get into more of the meat and potatoes of it, right? We go ahead and get a credit report so we can take a look at your debt to income ratio. That's going to be the biggest determining factor of what you qualify for. We will lay that out for you in detail so you know where you stand, and then we go through the documentation stage. Pay stubs, W-2s, taxes, bank statements. The reason we ask for bank statements is because sourcing money can be a little tough. So we want to make sure there's not a lot of cash going into the bank account. If there is, we can formulate a plan on how we can source your bank statements when you're under contract. And then those are the main documents right there. It gets a little bit more extensive when you go into the underwriting process, but a lot of those documents we don't need at the very beginning because they will tend to expire by the time you're under contract. So just pay stubs, W-2s, taxes, and bank statements will get us working on your pre-approval and get a detailed plan out to the client.
And that is something I want to mention. And that is why all of our deals close, is that very key word you said, underwriting.
Yes.
So that is where, the true meat and potatoes, like hardcore stuff comes out and about. So the reason we're able to close all of our loans is because you are sending it, to underwriting before we are even making our offers.
Correct.
And I love that because I never have to worry that something crazy is going to pop up or come up and the deal isn't going to. Now, if you are lying on your application, there's nothing him and I can do about that.
Yeah.
That's on the client. But, when we've done our due diligence, it makes it so smooth. And that's probably why I love working with you so much, is because I just know that we're going to close.
Yes.
I never have a doubt in my mind that we're getting to the closing table.
And we're going to push to close early as well if we can. Yeah.
And we typically do close early.
We do. Yeah. And the reason behind that is when you go under contract, there's a lot of things being thrown your way. You have inspections. You're trying to make sure this home is right for you. We don't want to put you through underwriting while you're under contract and ask you for a million things while you're trying to purchase a home. So we like to take our time during the pre-approval process. We will send you through underwriting. Underwriting is just a fancy term for being able to vet and go through all the documents you've provided up front to make sure everything is accurate. Typically takes anywhere from 24 to 48 hours once we have everything. That way you have a conditional approval letter. What this letter means is all we need is an appraisal and title work, and we can get you closed. Your offer looks more competitive in the market, and you can kick your feet up through the 30 days of closing and know you have a solid letter your way, and we can get you to the closing table.
And I think that's also something that makes, you and your team look so great and professional, is when we do deals together, Andrew is going to, so what I do is when I'm submitting your offer, I add Andrew to the email as well. And so he knows that once that email goes out, he knows, all right, now time for me to pick the phone up. I'm also going to introduce myself to the listing agent. And Andrew is going to make sure that that listing agent knows we're getting to the closing table, that he is going to, we are going to stay on top of all communication lines. And that is something that has helped me win several offers too.
100%.
Because everyone knows, like, we are going to be closing, and hey, this lender called me. Unlike so many other lenders, you're calling a 1-800 number if you're lucky.
Yeah, and good luck getting an answer with some of them.
Not going to get an answer. So that's something also that I have loved, working with you and your team. And, it closes. Everyone communicates well, and I'm really big about communication whenever I help my clients too.
It's a big purchase, and even with the homes that your clients or you want to offer on, we're pulling taxes on those homes, and we are giving you an idea of what the monthly payment is for that specific home. We're not sending you with a letter and saying, hey, come back to us when you find a home. We believe it takes a little bit more than that to be able to, number one, get you to the closing table and make sure you're having a positive experience or your client's having a positive experience. Taxes can vary, especially in the state of Texas.
Yes.
You can look at one home that's $300,000 and the taxes come back $100 a month higher on a home down the street. So we want to make sure we're
Mhm.
putting that in front of you and that you have an idea of what you're looking at before you sign your line on an offer and send it off to the sellers.